This is the Forex weekly wrap-up for June 22nd. Let's do it. Alright, what's up folks? Mark here at Deconstructing. Another fantastic week in the Forex market. I hope you guys were able to rip off a boatload of pips. This week was very interesting. We here at my firm, we loaded up a new pair called the Australian dollar versus the US dollar, and frankly speaking, this is a pair that I've never heard of before. So to the customer that introduced me to that pair and brought that to my attention, I want to give you a giant shout out. That's part of the reason I'm recording this video, is to kind of show you guys that you can be profitable on almost any pair if you do your diligence and you research and you backtest and you find stuff that shows a strong ability to trend, right? That's the name of the game. Anyway, so first thing we're going to look at is, you probably guessed it, the Euro New Zealand, my number one pair. Let's kick things off at the beginning of the week. Nice short signal right there in the dyno bars. Got kind of a shallow retracement, but then you had this gorgeous long signal right there. You got the deep retracement right on this bar. Let me see if I can highlight this for you here, right there. And that was the signal for 100 pips that way, right? For those of you that I've talked to on the phone, I legitimately hope that you're seeing these giant trend moves, right? And every week, week after week, I'm going to show you the same thing. It's 2 days of massive trends, 3 days of chopping around, and when you tally up your results at the end of the week, you're going to be killing it, right? So we scroll back. The day after that was decent. You got a long signal right there and a short signal right there, and that was it for the day. But for me personally, there was no real retracement. Right? Now again, I know many customers who don't wait for the retracement. They're a little bit more aggressive than I am, and there's nothing wrong with that, right? There is absolutely nothing wrong with being aggressive in your trading. You'll make a bunch of money, but your risk to reward ratio is also higher. So I didn't mess around on this day. This was a classic chop day, right? Classic. The next day, again, some beautiful signals, one short signal, one long signal. And for those of you that, are inquiring with me about how to optimize your charts, this is what I mean. When you optimize your charts, you got to go back and optimize your settings so that the majority of the trading days look like this, like no more than 1 to 2 nice signals. And when I say nice, this is what I mean by nice. You have one short signal, you had a decent retracement come in right there. Let me see if I can draw that for you. And then you had one long signal here and a gorgeous retracement right there into the length of this bar. And what do you know? 120 pips. Excuse me, 150 pips. So, I don't know, I don't know why people, I had a couple of customers contact me this week who tried to debate me on their minute charts. This one guy was talking about a 60-minute chart or a 1-hour chart, and I was trying to explain to him, like, dude, like, your 1-hour chart makes no sense. I bet you money that you are not making money. And he was just saying, oh, no, it's great, I'm doing really well. I'm like, well, if you're doing really well, why are you contacting me? And that kind of shut him up. But, at the end of the day, like, this is what I like, right? What you're looking at on the screen right now, this is what I like. 2 signals, maybe 3 signals max, and it plays out textbook. It plays out perfectly, right? So, we keep scrolling along here. The next day, of course, was chop, right? You had one long signal, one short signal, one long signal. Now this one had a nice retracement This one had a nice retracement, but I think I got stopped out at about 40 pips. I don't remember why. I think I was just doing like a 15 pip trailing stop when I was in the money. So, I mean, I didn't make too much, but you know, again, trading is discretionary. This turned out to be 90 pips, but really wasn't much in there for me. I'm hoping you guys, you know, made more than I did on that trade. Here was the long signal. Again, this didn't do much. Or excuse me, here was the short signal. This didn't do much. And then, you know, same old story. So on a day like today, where this was complete and total chop, you still didn't get hurt too bad. In fact, I would say 90% of you that are trading through chop, that are following my conservative methods, you're probably doing well. You're probably making like 20, 30 pips, in my guess. If you're not, then, you know, contact me and let's drill down and get into it and figure out why you're not. And of course, the last day of the session, killed it again. Short signal right there, long signal right there, short signal right there. The winner, of course, in case it wasn't super obvious, is the gigantic 100 pip move that happened right here. That was just, I mean, this is just more textbook stuff, right? So if we squish this in, you know, if we try to squish in the entire week, let's see if I can do that some more. Like, you can just, I mean, you can just kind of see, right? So here's basically the entire week. It looks good, right? But when you really drill into the individual days and the individual signals, what you're going to notice is you don't get too many signals. You get a maximum of like 1, 2, maybe 3 signals a day. Now, me personally, I fucking love that. I don't want to get too many signals. I want the signals that I get, I want them to be fucking spot on, right? So, again, back to what I'm talking about, which is optimizing. You got to work on your charts every week and optimize them. Evaluate the volatility. In this case, the Euro New Zealand, the volatility has really come down, you know, starting, I want to say like maybe mid-May or so. So I've adjusted my settings accordingly, right? And I'm still getting these ridiculously awesome signals, right? So when you look at these charts, I mean, when you look at the entire week session, it doesn't look that special. I mean, every week is the same, right? Every week you're gonna get days that look like this. And you're gonna get days that look like this. The days that look like this are where you're going to make the majority of your income and you're going to kill it. And I tell people that. I don't know why people don't believe me, but this is the secret sauce of day trading and this is how to do it. All right. So, what was interesting about this week is we looked at another pair. Here at my firm, we were introduced to another pair, and to the customer who might be watching this video who did introduce me to this pair, which is the Australian dollar versus the US dollar, I want to give you a shout out. You know who you are. Great job. So let's take a look at that one. And this is how it looks on the dyno bars. You can see here in the top left, this is the Australian versus the US dollar. Fucking love this pair. All right. You're going to see why. Like, what's interesting about this pair is, like, the trend starts very early in the session. And by the way, NinjaTrader plots the session break lines. If you're ever wondering what are these, like, vertical gray lines in your chart, these are the session break lines according to NinjaTrader. They're not always accurate, but it's just based on whatever time you are, or excuse me, it's just based on whatever time zone you live in the world. Anyway, so what's awesome about the Australian dollar versus the US dollar is it's just, man, this thing trends like a fucking beast, right? You got one signal right there, and it was just the same color. Day before that was chop, day before that was chop, and then look at the day before that. One signal right there, and it was the same color, right? Day before that was chop. Day before that was actually Sunday. We're going to ignore this. Friday, Look at that. One signal and it was the same color. So folks, you know what I mean? Like, as a day trader, you always got to be looking for an edge over the other guy, right? Everybody wants to talk about the euro versus the dollar or the US dollar versus the Japanese yen. It's on the news, it's on your trading magazines, but I don't know if you're going to make any money with those pairs, right? You got to find secret fucking pairs that no one knows about, or I should say not many people know about, and you backtest it and you optimize it and it looks like this. Now, what's interesting about the Australian dollar versus the US dollar, which is this pair right here, I figured out kind of an interesting secret about this pair. If you want to know more about that secret, email me or call me or whatever, text me. But it's been working great. Like, it's been working to the point where I almost can't believe how great it's been working. So I highly recommend you guys, take a look at this and load this up on your chart, and play around with it. I think you're going to love it. I think you're going to love the way it trends. And the reason I'm covering this one in our weekly recap is because I want to put this one under our trading spotlight. So let's go ahead and fire it up. Alright, so as you know, every week we take a look at some of the best trades of the week, and what we do is we shine a spotlight on those trades. We kind of deconstruct those trades, going backwards, see how those trend lines were drawn, see if we go conservative or aggressive. And the reason I do it is to kind of like show you guys, the risk to reward profiles. That's super important. I don't know why people focus more on how much money they're going to make instead of how much money they can potentially lose in the market. Professional traders always focus on their risk profile first and profits later. So I feel this is important, and I hope you guys will find value in this. So let's go ahead and kick off with this ginormous short trade that took place on the Australian versus the US dollar. So let's go ahead and start from the beginning, right? So the signal bar comes in right there to go short, right? So what do? We capture the highs and lows, and can anyone tell me what we do next? That is correct. We go to split screen, right? We put the dyno bars on the left and the T bars on the right, right? So let's go ahead and find that bar we just drew, and looks like 724 is the high and 721 is the low. So let's go ahead and draw that on the T-bar chart. 724 goes in right there, and 21 goes in right there. I mean, you just can't beat that. If all you got were signal bars with this length, like 3 pips, 5 pips, even 10 pips, I mean, it's just, you just got to take them. Like, you just got to take them. You got to go aggressive. And these are the cases where you bet like the 10 lot or the 20 lot. You basically bet the farm in these kind of trades. All right, so nothing to do, right? When the bar prints, we do what? We do nothing. We wait for the retracement to happen. Price dropped like a stone, and there's really nothing happening. But what do I tell you guys? The retracement always happens, right? The retracement happens I mean, look at the size of this retracement bar right here, right? How many people do you think got stopped out of their short position trying to go short, right? But the dyno bar says it's red and you're looking for shorts the entire duration and you're staying short, but you're carefully looking for shorts, right? So all these guys that when they saw, like, whatever, a 5-minute chart or who the hell knows, whatever chart they're trading, all those guys went short and they got stopped out on that massive retracement. Meanwhile, the professional, what I call the smart money, they're waiting up here to go short once again. So let's go ahead and follow along with this trade, right? So we go to the dyno bars, nothing's happening, we're just waiting, we're waiting for that retracement, and there you have it. Lo and behold, it comes right back into our zone. In case you don't know what our zone is, I'm going to maximize this and I'm going to draw the section that's our zone. That's our zone right there, right? So I'm going to go ahead and remove my global now because it's kind of annoying. And we're going to do what? We're going to draw the trend lines, right? Now, this was a case where either the aggressive method or the conservative method worked. Now, I always tell people I'm conservative, but not in the case when the length of the bar, the length of the signal bar is so small, like insanely fucking small, right? So you could go with the aggressive method and draw these trend lines right there, or you could wait for falling pivots, which is this one right over here. Let's get that out of the way. And simply connect falling pivots, or connect any of them, right? So that one, and that would have been your entry on this one. All right, so either one, it doesn't matter, right? I took the aggressive one just because, like I said, I look for the retracement. I look for it to come back into the zone, and if the zone is really small, I'm going to go aggressive all day long with the condition that the fill has to take place somewhere within the zone. So you can see here, I'm going to try to, let's zoom in here and maximize this. The fill took place somewhere in there, and that you can see is well inside the zone. Let me try to draw the zone. Let's make this thicker. There you go. So that fill, that short trade happened well within the zone. Trend lines were drawn. We got filled on our short right there where the trend line broke. Let's call that 422. Can you guys tell me where my stop goes? I'm hoping you're getting this by now. My stop goes in at the most recent pivot to the left. That one right there. 28 is the stop. 21 was my fill. 7 fucking pips of risk, people. All right? So, anyway, you can see what happened with the rest of that trade. It just... it just dropped like a stone the entire day, right? And if we flip over back to the side by side, we got in at 721. I'll just show you on the Dyno Bars chart. Let's draw 721 right there, 721, and look at the rest of the day. We went short right there. So I mean, people, stop making things complicated. You know, there's no need to have like 50 million questions. Optimize the chart is step one. Drawing the trend lines in a conservative manner, if that's suitable to you, is step two. If it's aggressive manner, again, if that's suitable to you, that's step 2.5. And then just wait. If you don't like the risk, if the risk is, like not 7 pips, if it's like 15 pips, don't fucking take the trade, right? Wait for something else. These patterns happen over and over again, right? Your job as a trader is to be patient and wait for the setups. You don't know if it's going to be, you have no idea if it's going to be a massive trend day or not, right? All you can do, the only things that are within your control are the time zones. You can kind of tell when some of the best setups happen, which for me is 8 p.m. Chicago time to 3 o'clock in the morning Chicago time. And then, so that's one thing you can control. And then you can control your risk. Don't take the 20 pip stops if you don't want to take the 20 pip stops. Wait for the 4 pip stops or the 6 pip stops, right? And then follow my strategy of getting to break even. So you get that stress, you get that tension off your head, right? So anyway, this is just more of the same stuff, folks. Happens day after day, week after week, month after month. These Dyno Bar trend filters, it's just, there's nothing, I can't, like I said at the beginning of this video, I can't even imagine what those people who are trading on minute charts or whatever, 1 hour charts, I don't know how they're making any money. I mean, just to provide context, let's just go ahead and look at a side-by-side split screen of, I don't know, somebody that's trading like a minute chart or something like that. So here's a minute chart, right? Let's turn on the global so we're all on the same page. And let's try to squish this in as much as we can. So the chart on the left is the dyno bars, great signal, and the chart on the right is like a 5-minute chart, right? I mean, our signal happened on the dyno bars chart. Our signal came in like somewhere around here, right? Now on a 5-minute bullshit chart, which these guys are using the indicators, this guy showed me his chart looked like this. I literally saw it, and I was like, what the fuck, man? What are you looking at? Where are you getting any signals? Where are your trades coming in? I don't. At the time that it printed, it looked like this. How do you know what's a short signal and what's a long signal, right? I mean, where would you put your stops? My first question is always, where would you put your stops? And this is just not clear to me. So anyway, so that was my little rant against that person. I mean, I wish him well, but what are you gonna do? This is I have a simple system. I like it. It works for me. I hope it works for you guys. But at the end of the day, you still have to put the work in. You still have to do your back testing. You still have to do your research, your diligence. But I'm telling you, folks, like when you do all the work, right? When you do all the work, you will be rewarded in the market. Because when you put the work in, it's only natural that you'll be rewarded. I hope all this makes sense to you. Thanks for watching this video. We'll see you next week, and as always, best trading wishes.